What's going on, folks? It's the first week of December, so you know what that means. It's time for another Real Report, which is a short video designed to help all Chicagoland's western suburban buyers and sellers make sense of this crazy real estate market. I'm Gray Mountain with That Properties, and as always, my real estate partner in the mortgage side, that's right there. Where's it? Right there. Amy Rankus with Proper Rate. Amy, I love the Christmas tree back and everything. Like, you're ready to go for Christmas.
I'm ready to go for Christmas. My favorite part of Christmas, well, not the only part, but of decorating is pulling out ornaments from when I was a little kid and showing them to my
You still have
kids.
those? That's awesome.
Yeah. My mom every year gave me an ornament, right? And so some have pictures of me, some are, what I was interested in at that time. Sure. So it's a fun trip. Some are like the terrible craft projects that I made in school. But I think that my second grade painted pasta noodle thing, that it still works and is like alive and physically here, is pretty awesome, and my kids get a kick out of it. So something to be said for being an 80s kid.
I love it. As most of you guys could tell, though, the market has cooled, right? Like as it usually does around the holiday season. So we're going to give you guys a look at what to expect in 2022. We'll touch on when's the right time for sellers to get some extra jingle jangle in their pockets, and we're going to try to help those buyers know when is the right time to strike, as well as what to expect when it comes to home prices and what those mortgage rates are going to actually do to those numbers. So to predict, let's do it this way. To predict what's on deck for us in 2022, we kind of have to look back at the trends, right? So obviously trends only matter if we're not in a crazy anomaly year, which we don't expect another one of those in 2022. Fingers crossed. So let's quickly take a look at these graphs. These are all going to go back 10 years, so you guys know that I'm not just blowing smoke up your butts. So obviously the main topic for sellers, and it continues to be this, is value, which is also sales price. What's my home value going to look like in 2022? And if I'm thinking of selling, when is the right time to go after that, right? So here's what we know. Last year was nuts, right? But 2020 was actually crazier. And I mean that in the mindset of predicting like what the market was going to do. It didn't go to plan for anybody. As you can see here, we typically see home values or sales prices top out in June and July. That's consistent for kind of the past 10 years. Post-market crash and recovery, we've kind of seen that right on trend. So if you look at 2020, you'll see that we started normal on our low point, January, February, but we stopped moving in March. Well, that's kind of when Illinois and pretty much the rest of the world went into lockdown, right? That threw this market into this craziness that we've seen over the past year and a half. So just like in 2009, 2010, we have an anomaly, right? We're off of our trend. We're not normal. You can see that things opened back up in May and absolutely went bonkers. So unlike normal years, right? Normal years, we're going to do this every time we say normal. We saw a peak in November. That was all the panic buying going on after we were freed, I guess. And everyone wanted more space because working from home with 2 to 3 kids, e-learning was making people go crazy. But it couldn't last forever. So we finally came down from that kind of minimally in April 2021. But we saw all the other people who didn't find a home due to extremely low inventory. Our lowest point was actually in May that year. Start jumping as soon as homes started coming on the market and more people were willing to sell due to the continued demand. So what we do see is that we topped out right around normal time in 2021, which is July and August. This is a good indicator that we're getting back to a more normal buy-sell cycle, which for us revolves around K through 12 school year, right? So for sellers, what do we expect? If you're going to sell and the most important thing is price, we're going to go right back to our comfort zone where we know we're going to get the most bang, right? So we should see a rise in home sale prices typical to years past, right? Rising in April, peaking in July, August. Just think about this. People buy move-up homes when kids will be impacted the least, okay? That means locking in a home at the end of the school year, closing either in the beginning or the end of summer, depending on those scheduled family vacations. This should be a lock for sellers as long as we don't see greater upheaval from the buyers, okay? So for buyers, the question after this past year, or past year and a half, when is the inventory coming? I hear you, I feel you, and I wish I had better news. The good news is we will see an increase in inventory. The bad news, it won't be so much to really affect the prices. They're still going to be inflated a bit, not the 13% year over year, but they're still going to be higher. Supply and demand will always win. So, and we still have a lot of
economics. It's economics.
Yeah, I mean, it's 101, right? I feel like it was, there's college for you. And we still have a lot of leftover buyers that didn't secure their home in 2021. So take a look at this. As I was saying to the sellers out there, we're getting back on track. On track for buyers is being able to predict when they'll have the most options. Our typical trend for new listings hitting the market obviously lines up pretty much with home values, as we saw before. You can see that in a normal year, here we go, normal year, our low point is in January, February. Then we see a jump and we peak in July. Remember, our cycles revolve around school year. Advice, don't get too antsy, be patient. 2023 was for a loop in the lockdown. Everything was shifted to later in the year. But as schools open back up, we saw things get back on trend a bit. So we expect the same for 2022. Keep an eye on those listings that pop up in February and March. You'll likely see them sit a little bit longer like we did in the years past, and you can kind of work a little bit more of a deal. However, if you wait until summer, you're going to have more options, but you'll be competing with more buyers than the years past. So look to pay somewhere between 2 to 3% higher in 2022 than in 2021. We're not seeing that big market correction just yet. It's coming, but we're not there. So a recap, quick. Sellers, list in April, May, see quicker sales and some extra cash in 2022. Buyers, keep an eye out and jump if it's the right fit for you, but be prepared to pay more again because the competition is still fierce. All that said, Amy, what do mortgage rates look like and what are they going to do to those continually kind of creeping up again this year?
Yep.
What are they going to do? What's it going to make those numbers look like?
Yeah, and I think similar to what you did, reflecting back at the start of this year, we were hovering right around 3%. Yep. Right now, we're hovering more into the 3.25 to 3.375. Still statistically, historically, incredibly low, but not as low as they have been. And I'll tell you, the biggest reason is because of inflation at this point. If you're hearing inflation talk in the news, it is real, it is important, especially if you're looking at purchasing a home and what your interest rate is going to be. Sure. So in a nutshell, this chart here is going to show you inflation has topped 6%. And that is 4% higher than where the Federal Reserve really wants to see inflation. There hasn't been as much activity around that this year because of COVID and economic recovery, and the Fed was saying this is just transitory, this inflation. Well, just this week, the Fed chairman was speaking and said, we're no longer saying it was transitory, like this is legit, real moving forward. Why does this matter? It matters because mortgage rates are based on how mortgage bonds are trading and at what price, okay? Sure. And if inflation is an issue, you're getting less return on your investment. And so mortgage bonds, or all bonds in general, typically don't like inflation because you're eroding the profit, right? And that's going to impact price, which then is going to drive interest rates up. That's the shortest example, I think, or explanation I can give. There's a lot more behind it, and I'm not an economist, but that in a nutshell is why all of the experts are forecasting that interest rates will continue to increase throughout 2022. Okay, so in the first quarter, most people are still saying we'll be around where we're at right now, around 3.375. But I'll tell you what, some of those forecasts were already set a month or two ago, and things do change, right? So, and of course, it's a forecast, it's an estimate. We don't know for sure.
Predicting on a normal year.
Yes, exactly. The expectation, I think, generally consensus is that rates will approach 4% by the end of the year. Still historically low, but nowhere near as low as we've seen in the past few years. That is going to impact affordability. So you might feel a bit of a squeeze if prices continue to appreciate, as we're expecting, as everyone's forecasting, and interest rates are increasing. It's going to cost you more for your house. So timing wise, I think what you said is interesting. I agree. We tend to really, in the suburbs, see the most activity around school years. That doesn't necessarily mean that's the best time for you to buy. you know, because of these factors. And let's just put all numbers aside. If the right house is out there for you and it's on the market, buy it. You know, I mean, if you try and time the market, good chance you're going to lose. And you might not get the house you want. So ultimately, you try and make a smart, informed decision, but nothing is ever perfect. Okay. So talked a little bit about where we think rates are going to be, inflation, scary. If you keep hearing about it, you know, you've maybe even just seen at the store, like things are more expensive than they used to be. Like that's inflation, people. That's what's happening. It's not just COVID and supply chain issues. That's a big part of it. Sure. It's not the only story. So I would like to finish with some good news. I love positive news, right?
I love this news. Yes.
This news, I'm really geeked out about it, honestly. I mean, I've been doing this for almost 17 years, and it's fun to get really excited about something.
Okay, so, can I say that I hope people have actually continued to watch all the way to this point, because I took up so much time. This is literally the most important. So yes, go.
Well, no, that's the most important, but okay, yeah, the most important. All right, so when we are looking at financing, there are loan limits for what we call a conforming loan. And in a nutshell, that means there are standards in the industry that are set by Fannie Mae and Freddie Mac, which are government-sponsored entities, but they set the rules that all lenders follow, okay, up to a certain loan limit. And that loan limit is based on home value, okay? So as we have seen homes appreciate in recent years, luckily that loan limit has been increasing. Well, guess what? This year we had the largest jump we've ever seen, 15% increase. Boom! But what does that mean, right? People are like, well, why do I care? You could still get financing called jumbo financing above that loan limit. So it doesn't mean that that's the only way we can get this done. What it means is it's easier to get that loan done. There's less paperwork, red tape, less down payment requirements, less reserve requirements. Everything is just truly, in my opinion, smoother and easier if you have a loan within or under that loan limit. Okay. So what we're talking about is a $647,000 loan is now a conforming loan. It's not jumbo. Okay. That is nearly $100,000 higher than what we could do this year in 2021. That's how massive this increase was. So what does that mean? That means if you're borrowing money at a low rate, which we're still expecting you to, and you're like, okay, I could put as little as 5% down if I wanted to, and keep money to do updates to the home that I'm buying, finish the basement, landscaping, invest the money, whatever you want to do. Just because you could put 20% down doesn't always mean that's financially the best decision. In the past, if it was putting you in the jumbo loan territory, you had to put at least 10% down, if not 20%, to get the kind of terms you really wanted. So this just opens up a lot more availability of different options for you as a buyer. And I think in the markets that Graham and I are often working in, a lot of homes are falling in this price range. You can now buy an $800,000 house with 20% down, and it's still a conforming loan. So yeah, I'm geeked out. If you're curious in your scenario, if this matters, call me, and we'll talk about it. I will happily try and talk to this and have it make sense for you, but
this is so big for the fact. I mean, Amy, the fact is that people who were concerned that we're continuing to rise in price, right? And then it's their second home purchase, right? So they're moving out. They're these move up buyers, and they're concerned going, oh man, we're going up. I don't know that I've got the reserves or what's in my bank account to cover that down payment to go that high because they continue to go. It's the glimmer of hope that yes, interest rates are creeping up, right? They're coming back up. They're still low. But now you can actually go at it, and it's in the conforming, you're able to, 5% down, whatever, you may end up putting. It's going to work for you, right?
It's going to work for you. And for a lot of people, I think we're still expecting a pretty competitive market for 2022, for sure. Right?
Absolutely,
and so a lot of people this year have been buying a home with no home sale contingency, meaning they're buying that home before they sell their current home. What does that mean? A lot of your cash or your equity is probably tied up in your home. And so quite often, financially, it is a burden to have your money tied up in your home. You're buying another one. You're like, where do I get the cash for the down payment?
Sure.
Ding, 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 ding. Okay, well, guess what? You might only be 5 or 10% down. You want to pay down that loan balance in the future? Fine. We'll hook you up with that. We can help you do that. It's not that hard. You don't even have to refi. But it's just a lot more options are available. So yeah, I'm excited.
I think it helps it not be so scary with the continued rise, and we haven't hit that correction to where we're coming back, down a little bit. It kind of takes a little bit of that fear away of running into 2022 and still those buyers being out there that haven't secured the home that they want.
That's right.
So I think it's awesome.
Absolutely.
That's my favorite part. That's my favorite part, Amy. Way to go.
High five. Absolutely.
Amy, thanks. Appreciate you so very much.
Thank you. Happy holidays.
Proper Rate, Graham Mountain, App Properties. If you guys need anything, reach out. Love to help you. Until beginning of the year. Peace.
That's right.